Hold on. It's the first time I'd ever set a reminder there on YouTube, so it took me a second to figure it out. Sorry for the delay. Let's turn that down. So if you have a copy of, and you should have a copy of the book, The Science of Getting Rich. You know, this is a great book for mindset for traders, in my opinion. There's a free link to the ebook on any of these platforms here, my link tree. It's usually toward the bottom. It's usually a link in any of the books. Like if you have the Money Flow Trading System, there's a link in there. It's an easy book to read. You should get a hard copy. It's one of those books you can just pick up at any page and read a little message. Chapter 2 says, there is a science. Let's see, turn this up. The chart we're looking at here is AMC, of course. That's the one that's in the news. We can see the 4 stages of price movement on this chart. But there is a science of getting rich. It's an exact science like algebra and arithmetic. There are certain laws that govern the process of acquiring riches. Once these laws are learned and obeyed by any man or woman, he or she will get rich with mathematical certainty. The ownership of money and property comes as a result of doing things in a certain way. Those who do things in a certain way, whether on purpose or accidental, get rich. While those who do not do things in a certain way, no matter how hard they work or how able they are, remain poor. It's a natural law that like causes always produce like effects. Therefore, any man or woman who learns to do things in a certain way will infallibly get rich. So that's chapter 2, and that's kind of like one of the basic concepts of that book. And it's this idea of doing things in a certain way. Now, for me, he's not talking about trading. That book was written in 1905, right? But it could go a lot of ways, right? Like, we know that repetition is the mother of skill. We know that. And so the secret to trading isn't necessarily to trade the way I trade or trade the way, whoever, Kathy Woods, Wall Street Bets, like any of these people, like everyone's going to develop their own style and strategy. The trick is to develop in yours and one that you can stick to, one that you can follow, because it's not always going to work, right? You're going to fall in and out of cycles. Stocks are going to go down. No matter how much we want them to go up, there's going to be times where they go down. And so what we're trying to do as we come into trading is we're trying to create order out of chaos, because the markets are chaotic. Nobody knows where they're going. Nobody. And one of the things that I figured out through my journey, and we'll come back to AMC, but let's just look at the Dow for a second. We'll look at the S&P. $SPX. If you put dollar signs in front of, if you're using stock charts, if you ever put a dollar sign in front of it, it'll take you to the actual index. $ Brent will take you to the actual futures traded contract. $SPX will be the S&P 500. And it won't be the index, it'll be the actual price of that item. It could be Bitcoin, whatever. And this is the S&P 500. And when we look at this, it can appear chaotic. It runs up, runs down, runs up, runs down, runs up. And so as a trader, we got to somehow make some sort of order out of chaos. And inside of that, we got to understand that we actually don't know where price is going, okay? So we really don't know. The worst thing you can do as a trader is start to think you know where price is going. That is very, very, very dangerous, because that'll cause you to ignore your own rules. It'll cause you to either take profits too soon or too late. Especially if you allow politics to clip into your mindset here. All of a sudden, there's a new president, and you begin to change the way you trade or invest. Mindset is super important. That's why I always say, come back to the book, The Science of Getting Rich. So we want to approach the markets, one, trying to create order out of chaos, but two, we were looking to make money and profit, not scared. So the moment you get scared in these markets, you got to stop. Like, you're not going to trade well. And some of that, too, could fall back to just the mechanics of, like, position sizing, and we may or may not get into that. But this is a daily chart. Let's back this. And when I say a daily, each one of these bars is 1 day. Now, most of you guys probably use candlesticks. A lot of people use candlesticks. I was trained by an old-school trader. We used bars. A candlestick and a bar is exactly the same thing, okay? The same thing. That little tick right there, that little tick to the left, that you see on that candle right here, that little tick right there is where it opened. The little tick on the right, it's where it closed. On a candle, you're going to have a similar line, right? It's just slightly different. It'll show you the open, it'll show you the close. That's the high, and that is the low. This is just a picture of what happened in the stock that day. And if you look over, and I know you're like, yeah, no shit, I know all this. I know, but let's just pretend like maybe we don't. If we look over here, we can see what that price was. So it opened around 34.10. It ran up to, what was it? 34.70 or 80 or something. That was a big move, actually. Right? And so we can look at that candle and we can go, why? This is really a bullish candle. It opened at the bottom and closed, well, in the middle of the top. Not very bullish. Here's a bearish candle. If you're using candles, I use bars. Opened down here, ran way up, only to close. Actually, it opened here, ran way up, only to close down here. Very bearish candle, right? So the last one we saw, what is this? Very bearish. Opened, sold off all the way to the bottom, and then closed on the bottom. Very bearish, right? So, but we can't let one day can't determine anything. It's a series of days. So in the money flow, we're looking for confirmation all the time. You'll hear me talk about, in a minute, I'm going to talk about a box. Well, a box needs 4 of these candles. Not 1, 4. Not 2, 4. Now, there are exceptions to when it's 2, and we'll talk about that. And as I begin to look at this and understand like what I just explained to you there, a simple bar, it's just a visual picture of what we're seeing happening. And as we began to look at a lot of bars, we're seeing a further picture, right? So this went from November to today. So this is like 2 months of trading, basically up, right? But now we have it moving down. But it's basically been moving up. Now you'll notice I have these lines, and again, you may think, yeah, well, I know that. All right, this line here is a simple moving average. 20-day, not 18, not 50, 20. 20 days. All this is doing is taking the price of the close on this candle, 1, that candle, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, goes back 20. Averages them out. 4th grade math. And the price on that average is exactly where that green line ends. So as a trader, and you'll see, this green line is core to helping me determine what the market is doing. And it's not, and whatever it's doing, I kind of assume it's just going to keep doing it. Until when? I don't know. Till it doesn't. And so I'm always just making assumptions. So when it went above the green line here, I just assume it's going to keep doing it till it doesn't. And that was right here. And so all of this time, no matter what is happening in the news and going on in the world and politics and elections and drama, as long as it's above this green line, I assume it's going to keep doing it forever until it doesn't. In the book, I use a reference to law of gravity. What's in motion will tend to stay in motion until it's hit with an equal and opposite force. So rather than me trying to predict the force, I just wait for it to happen. And then I need to reposition myself. Make sense? So that's a core understanding of the money flow, is that what is happening, I assume it continues to happen until it doesn't. And I'm not looking for information to go against the strategy. I'm looking to follow the strategy. Other little things that we'll talk about. You see these little ticks here? That's a 5-day and a 10-day. These are important. If you're in my boot camp, or maybe you bought the flash sale that I sent out, I have a whole 30-minute video where we go over just what I'm looking at on these. One, I'm looking how wide apart they are. That tells me momentum's picking up too, right? But I'm also looking at the configuration. That is the most important part when I look at these moving averages. It's not so much where price is what is the alignment? Because in order for AMC to go up, this is super important. Look at the alignment right here. Look at the alignment on that stock. The 5-day was above the 10-day, which was above the 20-day. And I assume it will keep doing that forever until it doesn't. So as it goes higher, as long as that 5-day is above the 10-day and above the 20, there's nothing for me to think about. The system already has, it's created order out of chaos. Chaos is your mind steps in and you start going, a little about this and a little about that, and you just start adding all these things that have nothing to do with what we're doing. Because prices don't travel based on logic. If logic was what moved the market, AMC wouldn't be $13. You've got to understand markets do not move based on logic. So when you start sitting around, and I have a lot of people do this, they're worried. We've got a new president, they're going to be taxing us and blah, 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 blah. They're using logic. I wish the market moved based on logic. If it did, there would be no economics professors. People would go study economics and they'd become billionaires, but they're not. They're just broke-ass teachers. Logic does not take you to wealth. Now, being an intelligent person, I'm not saying won't help you. Don't misunderstand what I'm saying. I'm saying you can't just use logic. Shit, everyone who's smart would be rich, and they're not. This is what makes trading sometimes hard for smart people, man. It makes it harder. Shit, it's easier for dummies. Once you just start accepting some basic things, and it's easier for dummies. What you're going to see me talk, and I'm using this chart because it's so popular in the thing, and I want you to understand the money flow would have caught this, and I'm a lot of people that were in it were using the money flow. And you're going to see me talk about these stages, and now we're building a stage 3, right? This is exactly the trading strategy. We're looking for stage 4 declines that start to go sideways, right? That's what we're looking for. Now, you got a false signal right here. We'll talk about how to handle that. It wasn't really false. It ended up paying off, right? And then we got a stage 4 here. What? Started to go sideways. Now, and I'm just going to jump into some of this. This pattern that you're seeing is the pattern you'll see me post all the time. This is the very first thing I'm looking at. If I don't see this on your stock as a trader, fuck your stock. I don't like your stock. Don't even ask me about your stock. I don't like it. Because this is what I'm looking for. I need to see this shit on the chart. Meaning price moving sideways, price ripping up, price moving sideways, price ripping down, price moving sideways, or I don't trade it. This is my edge. Your edge is finding a pattern that repeats, that you can cause order out of chaos. This gives me order out of the chaos of price going up and down. Now, I will miss stocks because they don't do this pattern. Cool. Okay. Like, I'm not trying to catch all stocks. I'm trying to catch the ones I'm trading. And I need this pattern to be clear as can be. The clearer this pattern, then that trade that doesn't mean you can't just buy some stocks. Don't misunderstand. I own buy and hold stocks, and there's plenty of my buy and hold that aren't doing this pattern. But when they set up in this pattern, all of a sudden they kick in, they go down, they start to go sideways, and I'm seeing the pattern. It'll go from not being clear to all of a sudden clear. And what is that telling you? That means institutional buyers, big money buyers are coming in. And if you go to the Peters report, it's free, you'll see this pattern. And here I have the pattern. And if you were just a cheap bastard and didn't want to buy my book and be like, man, I don't like to spend money on nothing, I ain't buying shit, you could come here and just rip me off. You could just learn the pattern. Here's the indicators, and you could just do that. But that'd be uncool. But you could do that because I just give it away. And watch, sideways, up, sideways, down, sideways. What is super important about this is these are called stages. In the old days, and I got stock books all the way back to the early 1800s. One of my passions besides trading is collecting old books. And I have old stock trading books from the days when they used to write charts by hand, right? When you used to pay $60 to order something. Like a trade cost $60 on one side, $60 on the other. So you had to be damn confident about what you were trading because you're starting off 120 in the hole. And you would call it in on a teletype or on a phone. That's when these books were. And they believed that markets move in 2-3 stages. They went sideways, they went up, and they went down. Just like that. And that was called the Dow Theory, and you can read on all that stuff. Right? It's fascinating stuff, though. It involves the transports and where's the Dow. It's pretty cool, actually. And that led me to stuff like the dogs of the Dow. I'm a huge proponent of the dogs of the Dow. I don't talk about them a lot because they're kind of boring. And if you're trading a small account, dogs of the Dow is a kind of a hard way to build your account. You want to trade shit like AMC, biotech stocks, penny stocks. You want to, because that's going to help you grow your account fast. If you got bigger money, you can trade safer. The more money you got, the easier trading gets, man. So let me show you an example. You see this pattern. Let me show you an example. So you see it right here? Sideways up, sideways down. It was forming the pattern before the big move. Now, we didn't know it would do this big move. Anybody telling you they knew it would do this, dude, you're talking to a complete moron, okay? Seriously. But he did know it was breaking out, or her, or him, whoever. Like, I could see it breaking out. There you go, stage 2 breakout. That day right there was your day to get in. Your first buy day was right here, according to the strategy. That is called stage 1 accumulation. The moment you can identify sideways movement at the bottom of a stage 4 decline and price starts to go sideways, now what you got to go do is determine a fundamental value. You need a way to quickly, what is a stock worth? Don't make this shit more complicated than it has to be. If you wanted to sell your house, you wouldn't sit around crying about it. I don't know how to value houses. You would pull up realtor.com and look at the house next door. Shit ain't that complicated, right? You go around and go, what are houses selling for? 350 to 380. All right, cool. We're going to sell our house for that. It wouldn't be no big drama. If you were going to sell a car, you'd go over to Kelly Blue Book, put in the car, and boom, there you go. You a little bit more research. You read around a little bit. Stocks are the same way. There's math formulas. People go to college, Wharton Business School, Yale, and they study stocks. And they can look at earnings, projections, cash flow, balance on hand, all kinds of shit that I don't really know what it is because I'm not that damn smart. I don't spin around reading books about balance sheets. You might, and if you're an accountant, you probably get an edge on that stuff. That's what Warren Buffett does all day. Sit around reading, looking for divergences in price and stock, right? I can't do that. So I got to outsource that, just like I do on my rental properties. I paint them, I manage them, find them. I don't do the electricity. I could die. I don't sit around reading balance sheets. I do glance at them. I know a lot just because I've been doing it 20 years, but it ain't my favorite thing to do. So there are services like Zacks, Tip Ranks, Morningstar, The Street. There's an endless list of these. I typically use Tip Ranks and Morningstar. Doesn't mean they're the best. I just like them. It adds. Now, once I decide I'm using one, I'm not using a bunch of others. I'm not trying to confuse myself. I'm trying to find a basic value for a stock. Now, one of the concepts of the money flow is that price has memory. Now, remember, we're trading. We're trading here. As a trader, we want to get in and get our money and get out. That is the definition of trading, right? Or flipping. I like to call it flipping stocks because I'm not a day trader. I think that's very difficult and long term is a very bad idea. But if it works for you, do it. Don't let me talk you out of some shit that's working. I'm just showing you what works for me. One thing I figured out through my study when I was learning about the 3 stages is that there wasn't 3. I ran into a book from 1982 because all I do is every week I buy 1 to 2 books on trading. 95% of those books are complete bullshit. I buy books on stochastics. I buy books on moving averages. I buy books on, to this day, I have over 600 books on trading. 95% of them are complete garbage. Why would I spend $30,000 on books when they're all garbage every time I get them? I only need one idea. I only need one piece of meat. I only need one diamond. I only need to find gold one time. One time. And I came across a book by an old newsletter writer by name Stan Weinstein, and he broke down the 4 stages of price movement. Blew my mind. That was the missing link to what I was doing. And here's what happened, though. Stan wasn't doing it on a daily. Get it? Stage 1, stage 2, stage 3, stage 4, stage 1, stage 2. Now we're in stage 3. And these indicators here help me determine the stages. We'll get to that. Here's what blew my mind. Stan was doing that shit on a weekly chart. Way too far for me as a trader. So look at the SPY. If we were to pull this shit up on a weekly, man, this is way too far back. Oh, hold on. I got my settings changed. Fill the chart. way too far. So Stan would be looking at this. Stan used a 10-day and a 30-day moving average. So he used this one and a 30, which would make it just slightly below this one. What Stan was looking for is when price had moved above those two, he would call it being in a stage 2. When it moved below stage 3 and then going forward, right? So in Stan's eyes, stage 1, stage 2, stage 4, blah, blah, blah. That's just too far out for me, man. I was just like, dude, I'm trying to trade. I can't do that. And as I began to look at the daily, and then I came, nobody was teaching this, though. I'm going through all my books, hundreds of fucking books. Nobody's teaching this. And as I began to see it, now it's not as clear on an index fund like the S&P 500, because this is made of 500 stocks, right? Stage 2, stage 3, stage 4, stage 1, stage 2, stage 3, stage 4, stage 1, stage 2, ran on, and now we're going into what appears to be a stage 4. And if you look, that box was created with what I always talk about, 4 candles. And now, we're just ignoring these other, and we haven't even talked about these other indicators. So as that began to break down to me, what does that tell me? That doesn't mean I need to get out of the market. It does tell me that some of my stocks are going to be under pressure, mostly the big caps that make up this index. So what do I need to do as a trader? Well, shit, I need to see what sectors are breaking out. And fuck this. Like, if this is going down, I need to focus my trading on what's breaking out, right? So there ain't going to be a lot of sense of running up trying to trade Facebook, Apple, if all that shit's coming down. I need to be looking for small cap stocks breaking out. Like, you get what I'm saying? So, like, we had SRNE breaking out. Well, that shit's going up. I don't need to sell this just because the market's going down. This is going up, right? Which we actually took profits, and that's what this indicator up here helps us do. Now, if you're looking at this chart, I want you to see why I got involved in this stock. I saw this pattern right here. This is what I'm looking for. Stage 4, stage 1, stage 2, stage 3, stage 4. That's where I got in the stock. You see what I'm looking at? If I don't see this on your stock chart, fuck that stock. It has nothing to do with me. It needs to do this. Now, when I look to the left, I need to see that it's doing this pattern. Now, right in here, it broke the pattern a minute. That happens. The pattern is alive. This is what people misunderstand. It is organic. It is moving. It is forever evolving. And just like you see prices moving around every day, it is moving. This thing is moving. And the pattern can be broken. And when it becomes broken, we have rules for that. And we stayed with this because it hadn't broke any of the support levels. So we stay with it because we're patient, right? But the main thing, this, according to Tip Ranks, had a target of $24. Do you see when I see a pattern like this on a stock trading for $7 and it has a $24 value and I'm coming off a stage 1 possible breakout? That might make me excited. Where's my target? Previous high. So we took profits this week. That was our target when we initiated right here, right? Back in November. So one of the basic concepts that I began to figure out as I studied, I came across a guy named Brian Shanahan. Brian Shanahan's a day trader. I'm not a day trader. I think day trading's dumb. But he's a day trader, very successful at it, okay? There's always the exception to the rule. Brian's very successful at it. Charges a lot of money to trade with him in his trade room. His book is $100 on Amazon, named Brian Shanahan. It's called Multiple Trading, what is it called? Something multiple, Technical Analysis and Multiple Time Frames. What Brian taught me was a different way of looking at the moving averages. But what Brian really taught me is price has memory, meaning price can easily come to where it was before. Been there before, now it's there again. So if I can buy it below those zones and the true value of the company, listen, what I'm fixing to tell you could make you a lot of money. Listen, if you can buy stocks undervalued in a stage 1 and the target is below true value, this is like buying a house and flipping it below retail, like below what the prices are on the street. That's going to be real easy to accomplish. right? So, but you have to get this trifecta to line up where the money flow pattern appears, stage 1, stage 3, stage 1, right? There's the 2 and the 4. When this pattern appears on a stock that's undervalued, that's where the money's at, man. And that's where my specialty, I'm really good at finding these stocks. Sometimes people ask me, well, how do you find them? Well, I mean, you got to do something. Shit, I can't give you the whole thing. Hold on. Had to grab my coffee. You know, groups can help you. Obviously, you know, I've talked about trading in a group for a while. I run a group. I'm not saying you need to trade in my group. I turn people away from our group all the time. If you're like, hey, I got $1,000, well, you can't be in the group. It's not that I'm trying to be a dick. You're just not going to be able to trade with me, man. I got 44 trades going. You'll be out of money. Trade 2. Trade 2 could happen by noon. You get what I'm saying? Like I put out 4 trades on Friday. How would you trade with me with $1,000? It just, I mean, you could watch. You could paper trade, I guess. Most people are too lazy to paper trade. Like they just won't do it. If they did paper trade with me for a year, it'd probably make them a great trader. In the meantime, they could be working, saving money, but most people won't put in the work training like that. But, so if you were with us in the money flow, and you're like, well, I don't have money to take that trade, why don't you open a paper trading account and take the fucking trade? Like put in work, like follow it, so that you can get the pressure of having 30, 40 trades going and managing them correctly. Because if you don't do that and you're just trading 8 and you're comfortable and you're like, oh, well, I don't want to think the others. Guess what? You never get the pressure of watching a portfolio melt down or trying to set targets on 40 trades or trying, like actually trading like you want to get rich, man. Like you're going to have to trade. Like it's not going to come easy. You know, so that's just I'll let that rant go. But, so as we begin putting all this together, if you're looking at the money flow, you're going to see there's 6 things I look at. 6 things. 5-day, 10-day, 20-day, the RSI, support and resistance, the MACD, and then actually there's more because I just make the assumption that we understand price is king and what stage is price in. All of these indicators are doing, they're not to get me out of trades. These indicators are to help me determine, they're to put a scope on my trading, to help me determine what stage are we really in. And if I don't see this pattern, I'm not that excited. Now, you can use this on your buy and hold. I do all the time. So I'm just doing the buying part, not the selling part. Does that make sense? So an example would be, what's a recent buy and hold? Oh, so I added a couple new, I try to add 1 to 3 stocks a year. Sometimes I go more. I get a little froggy. ED is a new stock we added. I added to my buy and hold. Coke is one too. We'll sow that pattern. You'll see it emerging. You see what I'm seeing here when I look at this? You see the money flow? That's all it is. When I use the term the money flow, it's this right here. Now, it ain't going to be picture perfect all the time. And, you know, don't get too hung up on the 20 where it's above it, below it. Don't let that fuck you up. You see the pattern? Now I'm excited. This is inside of my buy and hold. This is the exact pattern. Like if you go look, there it is. It's clear as day, right? So what do you think that does for me? That gets me, man, I'm pumped up now. Oh, by the way, it pays a 5% dividend. Hold on. Oh, by the way, it's below the 200, which, you know, I teach in my book that that's a big deal for only for dividend stocks, not for penny stocks, only for dividend stocks. This number here is in the bank. This is just a no-brainer. It will go to that, no problem, easy peasy, 74 easy. That's why I was saying, the more money you have, the easier trading gets. You could buy 70 grand here, take your 4 grand here. Like that is a no. These bread and butter trades where a dividend stock, a big cap dividend stock falls below the yellow line. There's your breakout. There's your target. I call it bread and butter. It's the only variation to the money flow. And it's doing the money flow below the yellow line, but it only works with dividend stocks, okay? I mean, it works with others, but that's not what I'm using it for. And so as I watch my buy and hold portfolio, I'm looking for this, right? And maybe I buy a shit ton. I already own it. I already own it. Why not buy a bunch more? With the idea of making a little alpha inside my buy and hold, and then I unload all the extra I bought right here, taking myself back to my core position. And you could trade inside of a buy and hold. Now, don't do that stuff unless you have some money. So like I'm trading $500,000. If I load up 30, 40 grand here and take off all that extra here, I made some money inside my tax sheltered account, right? Now I can take that money I made and I could push it over to maybe a new stock or a new position. See how all of a sudden we could use this inside of our buy and holds, right? And we could use the standard target. You don't have to do the bread and butter. You could, cool. So I'm swing trading this as well. A big swing trade that I've been taking on, not exciting, not exciting. Coca-Cola. You see it? You see the pattern? It's setting up. Now, we had a bad close on Friday, so we'll see what happens. But we still have solid support here. Now, one thing I need you to know, when you're looking at this pattern, in the book, I teach the breakout. The breakout is so simple. It is price breaking above the 20-day moving average. You have it sideways, the breakout. When I wrote the book, commissions were a big deal. We paid a lot of commissions, almost $20 a share to buy and $20 to sell. So as far as my swing trading, I really focused on the stage 2 breakout. I might take a little bit in the stage 1. Stage 1 a lot of times is where I would buy my options. For all my degenerate gamblers, options. Why? Because options are cheap. And I didn't have to commit all my capital. And it hadn't broke out yet. So I didn't know if I was right. So I would nibble on the stage 1. And often that's where I would take my options play. So over here on Coke, big sell off, pick up an option or two. Maybe, Coke, you probably pick up 10 or whatever, right? I'd commit, say, $300 to $500 in options right here. Why? Because if it drops down, I'm going to lose that money anyway if I was buying common shares, right? I'm going to lose that money anyway. So that was how I used to do options. I don't do that all the time, but it is still a viable. I do it a lot. And then on the breakout, I'd buy all the shares. Now I kind of do both. I have enough money. I buy shares. And if I really like the trade, if it's a simple trade, I'll put on some options. Like H&R Block, we just did, I think we had 300% return in our options. Why did I do it in H&R Block? Because it's a slow-ass, boring moving stock, so I need to juice it. I don't want to commit all my money to this boring, slow-ass stock when I got stocks moving 150% a day, like SRNE and these biotechs. So I bought a couple hundred shares and I bought some call options with the target to sell them previous high, which we did. So I sold half my options here, half here. Now we're still in the common shares. But do you see why I was looking at H&R Block? You see the pattern? So look, stage 1, stage 3, stage 4, sideways up, sideways down, created my box. See it? Where's my target? Brian Shanahan told me price has memory. Paid $100 for that book, and I got one fucking piece of information out of it that changed the way I trade. One. On one page, he said one thing, and that was all I needed. That was it. And that changed the way I traded. And when I started doing that, I no longer needed stop losses. So I don't trade with stop losses. I don't tell people not to trade with them. I'm just trying to be transparent and tell you how I trade. I'm not a Forex trader. I'm not a day trader. This will be like 3% of my capital. This went to fucking zero, okay? Like, it's not that big a deal. So I don't trade scared. I don't take positions so large I need them. As long as the 5 days above the 10-day and above the 20, this is bullish. Make sense? This is a stage 2. So I'm committed to my thing. We hit our first target. Where's the next target? I don't know. It's a completed swing trade. So until it breaks down, I'm just going to hold the rest. So we sold some up here. We sold some on the RSI. I've scaled the trade back now. As long as it stays above this 20 and just keeps moving, we'll just stay with it. That's what the money flow does. Is we're going to have reasonable targets, and then we're just going to let it ride. Hold on, man. What's going on over here? Sorry, I had to kick somebody out. There we go. Sorry about that. So you could, and I don't do this because I'm trying to make bigger money. You could get in, get out, hit your target, and you're out. And I have a buddy that trades the money flow like that. There you go. 2-week trade. How do you know it's a completed swing trade? The RSI. Bottom to top, he's done. He's out. You could do that. That's not how I trade. Don't join my trading group and trade like that. That's not how I trade because I want to keep it going. I want to make $500 a share. Now, if it hits true value up here, let's say the company's only worth $18, $19, then that could be a different conversation. We won't get into all that. I don't want to spend a lot of time on fundamentals. So you see what I'm looking for, right? The 4 stages of price movement. That's what I'm looking for, man. And I'm looking for my timing. And I'm looking, so you want to spend some time trying to understand what is a stage 1? What does it look like? And as you just go around looking at stage 1s, what you're going to see is the pattern is the same every time. These moving averages come together, which is what you see right there. Now, some people call this a moving average crossover. Yeah. But that's not what we're focused on. What we're focused on is everything is starting to come together. And about day 4, you're going to see everything is coming aligned. Price will start to move sideways. It's exactly what it did on GameStop. Look, these moving averages will come together before there's any big move. Even this little ass move over here, they come together. They come together here to go down, right? Duh. So if they're super wide, it's going to take a minute. It's going to take a minute for this trade to work out. And you see it, that's what the pausing's about. It's called accumulation. People are accumulating it on the down low right now. They're not telling everybody. And then it starts to move. There's your breakout. Price closing above that green line. Right back to what we look at here. Price closing above the green line. Where's our first target? Previous high. Right there. So I would have sold some right there. Now you're going to get the guy who goes, well, if you wouldn't have sold it, you would have made a lot more. Yeah, but I can't read the future. So I have a strategy. My strategy is I need money. So as soon as my first target's hit, I take off 1/4, 1/5, 10%, whatever it is. It just needs to be a consistent amount. Larger the account, maybe the less you take off. But I need new money to buy new trades, right? So I need to downsize the trade. If you're trading a smaller account, maybe you take half off. Now what do? Well, I wouldn't close it. Remember I told you my buddy, he would be out. Bottom, top, RSI goes from extreme low, extreme high. He's out of the trade. And then look what he misses. Another $16. I do these all the time. Look at bingo. If I get all out of this and it runs another $8, that hurts. Right? So we got in over here. Here's the breakout. Straight up, still in the trade. Okay? Let's look at Polo. If we get out just because it goes from extreme to extreme, hits our target, and then we miss another $13. These are the trades that make you rich. These are the trades that'll mess up for all the dumb options plays you did, for all the things you got wrong. So you have to be able to stay in there. Now look, 5-day, 10-day, 20-day, they're all numerically aligned. This could shake people out though. It went from 30 to 19 and they start to panic. Why? The move was so big. This is why we take some off. This is why we take shares off so that the pullback's not that bad. So instead of using a trailing stop, I'm downsizing the trade. Makes sense? And once I'm in a core like position that I'm going to just ride out until the sell signal, you're just going to have to be, you have to figure out what that number is, Now you catch some shit like GameStop where it goes just completely bananas. I think you got to take more than half. I mean, you got to take it down to like 25%. Like that's a lottery ticket, right? You wake up to a lottery ticket, that's a different conversation, but those aren't, $10 moves are not lottery tickets, okay? This was a big ass move. we went from $4 to $20. These happen all the time. I don't know why everybody's making a big deal about these others. It's just because it's in the news, man. A lot of that shit they're talking about is complete nonsense. It's just fear and greed, man. Ain't some fucking social movement taking on Wall Street. It's all nonsense. Who do you think's moving this up? You think that's just Robinhood traders, dude? There's hedge funds in there. There's billionaires in this trade. Old boy from Facebook's in the trade. Fucking looks like Elon's in the trade. I know 3 guys that are worth $100 million that are in the trade. So this ain't just kids on Robinhood, man. This is all kinds of people. This is momentum. You don't think there's algorithmic trade hedge funds that trade algorithmic breakouts that aren't in this thing? Come on, man. Come on, man. Everybody's in this shit, man. I mean, not everybody, but I'm just saying there's a lot of people in this thing, man. Again, there's your breakout. This was a runaway. We talk about this on Tesla and stuff. What do you do when you have a runaway, man? Runs up, goes sideways, pulls back. You see the sideways? Big moves come from sideways. Look, sideways, big move. Look, sideways, big move. Look, sideways. If I can't teach you anything, you got to get this. All big moves come from sideways. Go look at any chart. Go look, and that's called the box. Other people don't call it the box. You say, why do you call it the box? Because I don't listen to other people. So, once I established the way I was trading and that it works, I don't take in a lot of other people's trading content. Let's see. What is up with these motherfuckers? Oh, man. YouTube's crazy, man. You get all these bots on there and people talking and fucking talking about shit that doesn't have anything to do with anything. Let's go back to the Dow for just a second. Oop, hold on. I keep doing this. I've got my chart settings. I'm playing with some settings here. If we back up for just a second, this is a 10-year chart. 10-year chart. 10-year chart of the Dow. 10 years. And what do you notice about it? If I show you the next 10 years, it looks a lot like this one. And the next 10 years, and the next 10 years. And we can go all the way back to like 1850. And in 1850, it was way down here, and now it's way up here. And during all of this, you have all kinds of smart people, commentators. Fox News is the worst. I'm a conservative, but they're the worst at this. Just scaring people. And every so often, the market sells off. And through this entire run, guys like Peter Schiff, what's that other name? Robert Denton, shit, even Grant Cardone, all kinds of people. You need to get out of stocks. You need to get out of stocks. Stocks are dangerous. Stocks are, and yet, all kinds of wealth is being made all around you from people in stocks. People in GameStop, people in AMC. Those are just recent ones. Those aren't the only ones. They're just in the news right now. And the reason it works is that over time, stocks go up. Hey, William, shut the fuck up and listen. How about that, dude? Shut the fuck up and listen. God damn. You stop talking and listen. Unless you want to run the class, that's an option. So, damn. Greedy motherfucker, shut up. I'm going to tell you what you need to know, man. It's fucking distracting, dude. Imagine being a teacher in a class and you're sitting there talking and dude's raising his fucking hand the whole time. Like, dude, shut up. Listen. It's fucking annoying. So, we have to have this. Remember I talk about the mindset. This is super important to the mindset. Meaning that over time, I have to believe that Not every single stock. I get that. Some stocks don't go, like you're going to have trash stocks. So this is where stock selection is super important, right? You want to pick stocks that are going to follow the market or better. We want to beat the market. So if we go look at Facebook, what do you see? Same thing. It's going up with the market, right? And if we go, I mean, these are just the big ones. Look at Apple. Now, their patterns aren't all exactly the same, but if the general market over the last 10 years is going up, big quality companies are going up, right? And we could just go down the list here. Let's look at Netflix. Look. Just look at all, I mean, just pick them. Now, this is a penny stock, SRNE. Notice the difference. Chaos, right? Look at Apple. Or Netflix. Look at Apple. Look at Facebook. They're marching with the market, right? Quality companies are just going to follow the market. Now let's look at a penny stock. Now you may look at this and say, oh shit, that looks like chaos. You know what I see on this? That's a lot of stage 4 declines, a lot of stage 2 breakouts, a lot of stage 4 declines, a lot of stage 2 breakouts. So let's take it to a weekly. Damn. You see how all of a sudden I can make some money trading this, right? Because this thing is moving. Not as easy on a Facebook. Not as easy on Apple. Now you can trade those, but I'm saying the big money. So, you know, let's look at, I haven't even put this one on here, but let's look at GameStop on a weekly. Is that a weekly? Oh, I guess it is. Shit. God bless. That stock is crazy, huh? That's not a good example, is it? That's a, man, that move is just absolutely mind-boggling. My point being is index stocks, the stocks that make up the indexes, the Facebooks, the blah, 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 they're going to tend to just follow the overall market. Let's look at Tesla on a monthly. Even Tesla on a monthly, although it caught these long periods of nowhere, it's genuinely lower to higher, right? Genuinely lower to higher in the last 10 years. Inside of this is where we got our stages. Stage 1. Why is this important? This is super important. This is super important. Because inside of this is when we're going to get our stage 4s. And right there, like, I mean, we're going to get our pattern to be able to trade. You can almost see it even on the weekly here. Start seeing the pattern, right, for Netflix. So, or Tesla. So if we drop down from a monthly to a weekly, each bar's 1 week. Look, we've had this amazing run, of course. Let's take it to a daily. All of a sudden, you know, we're able to see our patterns here. It was better back here. This has been on a fucking tear, dude. Again, why you don't want to get out just because your target's hit? Look, because this is what makes you rich. Just letting a stock like this drift and 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 drift. I'm just playing with you, man. Don't take it personal. If I yell at you, I still love you, okay? I don't even remember your name. So don't take it personal. I even yell at my friends sometimes. It's just the way I am. That's why I don't have a lot of friends, to be honest. Because I freak out and throw things at them. And that makes it hard to have friends when you throw things at people. Or employees. I used to have 6 employees. Now I don't have any. You know why? Because after the 3rd girl left my office crying, I figured I was probably going to get sued and I needed to stop having employees. So I grew up in the Army, man. I went from the high school to the Army, and like they would choke your ass out if you did dumb shit. Like that was how it worked. You're in combat arms in the Army. You don't get to make a lot of dumb things. Like you have to do it right or get the fuck out. Like that's how it works, man. So, and then I went to work at a prison after the Army. And obviously in prison, if you're real nice to people, that don't work so well. So, and that's where from 7 years in the Army, 4 years in prison, like your language changes. And all of a sudden you're talking to grandma like, what the fuck are you doing? You know, you just can't help it. And it's like, okay, try to stop here. So my point is, with a combination of a big picture view, reading the science of getting rich, so you're looking for opportunity, with the fundamental belief that over time stocks go up. We can rule out all this. The market's going to crash. Get all that shit out of your head. Yes, markets crash, but it doesn't matter until it crashes. So in the meantime, you trade what's in front of you. And when a crash comes, it'll come. It ain't going to be overnight. You're going to see it roll over. AMC didn't roll up overnight. It took a couple days. Look, you could have bought it here, could have bought it here, and then it started to move. Still could have bought it, and then it ran. Like, that's a stage two. Same thing on a meltdown. A market meltdown is going to be the same. You're going to have opportunity. And even when the market's going down, if you're picking the right stocks, they're going up. You know, DVAX is going up, market's going down, right? OBSV, you know, it's still holding up. Market went down, you know. So this is why we want to trade a basket of stocks and not just these big ass index stocks, because if you're going to do that, you're better off just trading an index fund. What was I going to say? The RSI. The things you need to focus on first. Let's say you're a new trader. Here's what you need to do. Get some charts. Get some real charts. I like stockcharts.com. You know, I don't make any money from it. If you put my email in there when you recommend, they give me a free month, you know, whatever. I like this because it looks exactly the same here as it does on my computer, as it does on my phone. So I have congruency. I get to take all my charts with me. Like I chart all of Kathy Wood stocks. Speaking of which, SRPT. This is one of her stocks that got smashed. So when I look at this chart, what do you think? What am my first thing I'm looking for? Is the money flow pattern there? Bam! Stage 4 decline. Big time, right? Big time. I want to wait 4 days. 1, 2, 3, 4. That's first day I can buy. Now, this stock is owned by one of the greatest stock traders in history. And they're not selling it. How much more research do you need? Seriously. Like, you know what I mean? Like, that's not to say you just buy